Go ahead.
All right. The max out of pocket is inclusive of anything that you've paid, whether that's a copay towards your deductible, anything that you've paid out of pocket for prescription. And so you have a hard cap limit of $9,400 on this policy. Most of the max out of pockets are five, six, $7,000 range, but on this plan, it's a higher one. So it's 9,400. In that case, that is your maximum financial risk, for years. So people ask, why is health insurance so expensive? This $9,400, that's your worst case scenario, seems like a tremendous amount of money, and it certainly is. But the insurance company makes a deal like, okay, you're going to pay us a premium. You're going to have a maximum responsibility of $9,400. And then we take all the responsibility after that up to infinity. You don't see $1 million claims that often, but they do happen. Hemophilia can be a couple of $1 million a year to treat. And so that $9,400 seems like a lot, but from an insurance company's perspective, they're covering that. You could have several $100,000 that they're paying the rest out. And so that's your cap. It includes the deductible. A lot of people think they have to pay the deductible and the max out of pocket. That's not the case. So in the case of that $20,000 surgery, you would pay $9,400 for that surgery. The insurance company would pay the $10,600. And then let's say this happened on day one of the plan. The remainder of the year, you would have nothing that you would owe, no copays. If you went to see the doctor, no copays at the pharmacy. If you needed a medication, if you had another surgery, all of that would be covered at zero cost. So that's your maximum that you could possibly have. One of the things that's really fantastic, and I want to, if you take nothing out of this, what we're talking about today, please just this. Every plan that you will ever look at is going to have the same things in the same places. There may be different amounts. So the deductible might be $2,500, might be $7,500, might be $9,000. You just never know. But all that information is going to be in the same spot and what it covers. This is essentially a Q&A. And so you have the questions, you have the answers, and then the explanation in the right-hand column. So the most important thing is what's your max out of pocket, because that describes your total financial risk. You can go down the other parts of this. Will you pay less to use a network provider? Yes, generally speaking, that's a truism across all health insurance. You want to stay in the network. This is one that's common with HMOs. Do you need a referral to see a specialist? On this plan, you do not, but there are some HMO type plans where you may need a referral to see a specialist. So we were talking about deductible, co-insurance, which you'll see down here, and then maximum out of pocket. And again, if you go to, you see primary care visit to treat, an injury or illness, that's going to be a $50 copay. And it says deductible does not apply. So this is just going to be a copay. Now, anything that you pay out of your pocket, remember, that applies towards your maximum out of pocket. So if you had 10 specialist visits, which are $100 on this plan, $100 copay, your max out of pocket, if it was $9,400, would be reduced, and now it's $8,400 remaining. And that resets every year. So within the year which you're covered, that's going to be calculated. Most of the carriers out there have pretty good apps where you can track what progress have you made towards your deductible? What progress have you made to your max out of pocket? What have you done as far as that's concerned? And where do you sit? And that'll give you a good sense to plan for the rest of the year. There's some people that have put off surgeries. For instance, I'll give you a personal example. Probably needed an Achilles surgery for the last couple of years. I put it off, but if I had something else happen where I met my max out of pocket or got real close to it, I'd probably schedule the Achilles surgery just to get it done, because it's not going to be extra cost to me. It'll be covered 100% if I've already met my max out of pocket. So those are things that the app can track and help you plan your medical expenses. Typically, there's a difference between primary care and specialists. In primary care, for men, it's fairly simple. That's just going to be your family doctor. Specialist is going to be any ologist, anything like cardiologist, dermatologist, anything with an ologist behind it. The one exception comes in with the ladies. Their primary care can be an obstetrician or OBGYN. That is something they can use as primary care. The copay is going to be an amount that you're going to pay per visit. And I get this question a ton. Well, does it cover if I get an extra service, if I get blood work, if I get an image like an x-ray in office? And that will depend on your plan. And it will also depend on how the doctor codes it. So on this plan, I would say very likely that if you had an x-ray done in your doctor's office, you paid the $50 copay and said, let's take a look. Let's get an x-ray here in the office. If you have that done, that you would get a separate bill for that x-ray work, be subject to your deductible, subject to the $7,500. So a typical x-ray is going to be $250, $300. And so probably that's what you're going to end up having to pay. That will apply towards your deductible. So your deductible will be lessened by that amount, and you are likely going to have that expense. So the base assumption is that if you go into a doctor's office, anything that they do extra, whether it's a shot, blood work, and I'm not talking about routine annual physical blood work, I'm talking something different there. Any of that, you're likely to have an extra bill that comes from that. And it's unfortunately dependent on how the practice decides to code it. It could be a little different in a different situation. But generally speaking, imaging, you're going to have to reach your deductible first on a lot of plans. Some plans still have copays for imaging. It is less likely than it was 5 years ago. Imaging is one of those things that the medical profession has used as a profit center. And I'm not saying that, hospitals are cheating customers, but there's been a pretty large uptick in them over the past 10 years. Insurance companies have responded by making most of these imaging type things subject to coinsurance and the deductible. One of the things I'll mention, if you go to the doctor and you're like, okay, well, I know my insurance covers this poorly, and I was referred to get an image done. Say it's an MRI. Say I walk into the doctor and I've got a knee issue and they're like, it could be something worse. Let's send you out for an MRI. There are standalone facilities that do MRIs at a much lower cost than you would get if you just went to the local hospital system. And since you're going to have to be footing the bill until you reach your deductible, it's very sensible to shop around for those sort of things. Imaging is one of the quickest and easiest places you can save money. I'll give you, for example, several years ago, I was asked to get an MRI, and the place where they sent me was a teaching hospital, which is one of the most expensive places to get anything done. So I looked around and there was a standalone facility that was a third of the cost. It was about $800 to get an MRI there versus almost $3,000 to get it at the teaching hospital. And you have total right as a patient to go wherever you want. They'll send the MRI to your physician and they'll look at it. They may give you a hard time about it, but it's totally up to you where you go and get that done. So that's potential cost savings. So we've covered the deductible, the max out of pocket, copays for visiting a doctor or specialist. Testing's a big one. Now we're going to go into the medication. Medication is something that has got trickier in the last few years with the expansion of very expensive medications. So what I mean by that is most medications, in fact, about 90% of the medications out there are actually generic. And so low cost, generic, low cost typically go together. It's not always the case, but by and large, if you get a generic medication, it's going to be affordable, especially through a plan. Here you can see, and I'm sorry it goes between two pages, but you have different tiers And this, again, is on every single plan. It's going to be structured just like this. It's going to tell you what tiers are there and what the tiers cover. So this first tier is generic drugs. That's tier one. You're going to have a copay. This copay is the maximum you would have to pay. So if the prescription's $4, they're not going to ask you to pay a $25 copay. You're going to pay $4. But if you were to have the more expensive generic prescription, you may have to pay that maximum of $25. And that's tier one. Tier two, you're going to have brand drugs in there. This is the preferred brand at tier two, $50 copay. Then you go up to non-preferred brand and non-preferred generics. Those are typically medications that are less used. You can also go through if there's a medication that is outside of what they call the formulary. And the formulary is basically all the medications that the insurance covers, which they're required to cover medications in each therapeutic class. So for any condition you have, they're going to have medications they'll cover that will treat the condition. And if for whatever reason, let's say you tried the medication in the past and it gave you some awful side effect, you can do what's called a prior authorization, and they will many times allow that medication to be used and cover it. That's nothing you would have to deal with. That's something your doctor would deal with the insurance company in the background for. The last copay is the specialty drugs, and that's tier four. These drugs are one of the reasons why health insurance is getting so expensive. $500 copay seems extreme, and that certainly is a lot of money, especially if it's a prescription you're having to get filled monthly. However, some of these medications in this specialty tier can cost $10,000, $15,000, $20,000 a month. And so there are usually copay assistance programs that will reduce that copay in this tier to something more affordable, if not nearly free. There are many of them that only require $5 or $10 through a copay assistance program. If you have questions about that, I can certainly help you. I've helped many people find copay assistance programs. So that's medications. With medications, if you are like me, just want to make sure you're saving as much money as you can. Either ask the pharmacist or look on GoodRx to see if there's a manufacturer's coupon that might make it less expensive. I'd say $100 or so by doing it this way. Now, if you go outside the plan through one of those manufacturer's coupons, it does not apply to your deductible. So be aware of that. Or in this case, it would not apply to your maximum out of pocket. But if instead of being a $100 copay, it's $25, maybe that makes sense for you. So we've covered doctor's visits, medicine, and imaging. Now we're going to surgery. If you have an outpatient surgery, follow along where it says 50% coinsurance. That means you will have to meet your deductible first. So our deductible in this plan, $7,500. So we'll have to be responsible for the first $7,500, and then 50% of the remaining balance up to that $9,400. So of the next $1,900, we have an additional $1,900 maximum responsibility here. So you would think, okay, well, that doesn't seem like a very good deal, but some of these surgeries, like common knee surgeries, can be $50,000 to $80,000. So if you've met any part of your deductible or towards your max out of pocket, getting in under $10,000 for that surgery, it will not be pleasant, but you will not be financially ruined. It may break your budget for a period of time, but it's not going to make you declare bankruptcy. Emergency, if you need it, the next medical event is emergency room, and then ambulance and urgent care. Urgent care is always going to be an option that I would strongly consider if you do not have a life-threatening event. If you think you're having a heart attack, go to the ER or call 911. But if it's minor, like if you think you broke your ankle, honestly, that's an urgent care visit. That's not an ER visit. They're going to do the same things. They're going to take an x-ray, give you a boot. If it is broken, they're not going to give you a cast there, either at urgent care or the emergency room. You're going to have to make an appointment with an orthopedic doctor to do that later. In both situations, you'll stabilize. Now, under that, I think I broke my ankle situation. If you go to the ER, I can guarantee you that will be $5,000. Urgent care, that's going to be 75. You may get some extra billing for imaging, but it'll be a few $100 worst case scenario versus thousands of dollars at the emergency room. And then hospital stays, anything you see where it says 50% co-insurance, there's going to be a deductible that you have to meet before you pay the co-insurance. And so if whatever percentage you see here will be what you pay. So if your percentage was 20%, it would be 20%. And you'll never see anything over 50%. 50 is as high as it goes. So the average hospital stay is about $5,000 at a cheap hospital, $7,500 or so at a more metropolitan hospital, and that's just for a general bed per night. It gets double that for ICU. So you'll have your deductible, you'll pay your co-insurance if your deductible doesn't cover the entire amount, and then up to your max out of pocket on a hospital stay. A behavioral assistance, so mental health, the Affordable Care Act forced plans to treat mental health the same way coverage-wise as physical health. So you're going to be able to get treatment like doctor's visits for mental health for just a copay here. And then if you're in certain clinical settings, like if you had to go to an inpatient mental health or a rehab, your deductible would apply. You would want to make sure, because the networks get a little bit narrower when it comes to the rehab world. If you need to go into a rehab, you want to make sure that that's going to be covered well by your insurance, because those things, if it was not covered, could be something that does financially give you a really, really tough time. So you want to make sure it's in network. And then we're coming towards pregnancy and childbirth and delivery. It will give examples. So every one of these benefit summaries is going to go line by line. It's going to cover childbirth and delivery, and that is the maximum cost. Again, here, deductible, all that's going to apply. Now we're going to go down to the bottom, because this is other things that you'll see. It'll have this part where it shows excluded services. So this is a medical plan. You're going to have a separate dental plan. It's not going to cover this. Some plans are required to cover fertility treatment. This plan does not. So it is a little different. And this is not the only plan document. There are other plan documents you can check, but this is the one that is quick and easy to see how it will cover things. Okay. These same examples are in every plan. So the example of having a baby, if you are diabetic, and if you break something, it's going to tell you what to expect at the very bottom and how we got there. So if you take the case of Peg is having a baby, it tells you the deductible, copayment for a specialist, for the labor and delivery, what all of that costs. So you're going to have what the deductibles are going to be, what the co-insurance, all of that, and then a total of almost the max out of pocket. I typically advise people that are getting ready to have a child, or they're going to a new plan, that whatever your max out of pocket is, that's likely what you're going to pay to have a child. So on this plan, it's within $600 of that. And with the type 2 diabetes, so this is one that could vary a lot. I don't particularly love the inclusion of this example, because with medications, a lot can vary with a diabetic. And for instance, the GLP-1s, those Ozempics and Mounjaros and those types of things, can change whether you're diabetic that has to have those, or you're a diabetic that can take some nearly free metformin and get by. It's going to change drastically. So that's something to be aware of. And then the fracture, I think this fracture example, they have not updated this in many years to reflect today's costs. And I think the one example that's the furthest off is a simple fracture. There's no way that you're going to go to an emergency room and get crutches and rehab and all that other stuff for $2,800. It's just not going to happen. But every plan will have these three exact examples. And so you can line them up and say, okay, well, they would pay this much or this much. I would advise you to know and understand and use. When do you do it? I think when you're looking at a plan through open enrollment is a great time. I don't pretend that people care about this unless they either need it or there's something that needs to be addressed, or it's open enrollment, they're buying a new plan. However, if you put it in a drawer, whether a literal drawer or have it saved somewhere where you can refer to it, you can reference it, you're comfortable with the document, and you have confidence that you can get the answers you need, that takes you a long way. And frankly, if you understand what a deductible is, that that's the amount that you pay, that's your responsibility before the insurance kicks in on a service that doesn't have a copay attached to it, you're head and shoulders above the average person in America.
Thanks for walking us through that. And next time we'll probably walk through what an alternative would be, which is health sharing. And one of the advantages to health sharing is that you come in as a cash patient. So this was hopefully helpful for the audience to understand some of the basics about health insurance works. And if you have more questions, of course, you can feel free to schedule time with myself or Brad. But thank you for your time, Brad. Greatly appreciate it.
Thank you.